Well, thank you very much for the invitation to be part of FinTech Americas in this live edition over FATV. And I wanted to just start by saying when Ray Ruga asked me to do this talk a couple of months ago, we really, neither him or I knew we were going to be where we are today with the COVID-19 situation. And all the quarantines are taking place around the world, and especially in our region, across different countries. And when we think about digitization and digital transformation, I thought it would be important to mention that, because when I was preparing my talk, I was going to start by referring to how our industry have spent the last 30 years or so trying to drive electronifications and digitization. And we really have not achieved a deep penetration when it comes to bancarization and financial inclusion. But now with the COVID-19, what's going on with the coronavirus, more than ever, I believe that talking about digital transformation, digitization, and financial inclusion with higher levels of bancarization is critical, more than ever before. And in my talk about banking the next billion, I want to take you for a walk across what happened in the mid-2000s and where we are today, and where I believe we're going to be, especially next year and the years to come, with what's happening today, in the context of what's going on today. And so in the mid-2000s, we, as a financial industry, we saw the emergence of a new business model of companies that were born digital. And they invested a lot in technology. They've raised a lot of capital, invested in great digital experiences, and different than how we've done it in banks and others, traditional companies. They went out and offered these products and services for free. And this was unique because any company who will invest a lot of money in the products and services, great platforms, they will actually monetize them by creating a certain access fee or monthly fee, so forth, so on. Or they will find a way to attract their clients by having them pay for it. But these businesses, these digital businesses, figured out that data was very important, and that if they would let their clients access their platforms for free, they would later come in the back of that and provide even better experience and find new revenue models around the data that they were capturing. And so these companies came into our industry, to different industries, including ours, including to banking, and they did what we today call disruption. They came in and found gaps or found opportunities where there was a lot of friction between these companies and their clients. And they came in and they layered these companies and offered better experiences and disrupted these industries. In some cases, created brand new business models, and in others, just improved on them. And so what we see, different industries in different stages are just being disrupted in different ways. And so while many, as you see in the slide on the right-hand side, are already disrupted, others on the left-hand side are coming in slower. And you could take this slide and apply it to a region. So you could say Asia. The reality in Asia is a lot more acute and much more advanced in this disruption than Latin America. And if you go to Latin America, you could say Mexico, Brazil, Colombia, Peru to a certain extent, Argentina. These are countries are way advanced, and we see these business models, excuse me, that I'm referring to here in this slide. You will see these business models that have emerged, and they're really doing and going through these disruptions. So what's going on in Latin America? Latin America, for the first time, second quarter of last year, for the first time saw higher levels of capital injections in these new digital business models, but specifically on fintechs than Asia. And so this was the first time where we in Latin America kind of got I would say, an alert that said, well, this disruption is real. Not only is real, because we see it and we see the adoption, the high level of digital adoption going on across different countries, but also the investors are coming into Latin America and starting to put money on these business models. And so that for us, that was the first time that we felt not only that there was a high adoption, digital adoption of these business models, and that the region was transforming, but also the investors were coming in. As I was saying, if you look at the second quarter of last year, this, for the first time, we exceeded China and India altogether in these investments. And so now what we are seeing is that Latin America is well poised for digital transformation and well poised for digital disruption. But what does that disruption means, really? If we think of the financial industry, as I said in the start, and the financial industry has not achieved a high level of bancarization and I would say financial inclusion because, for target market reasons or for distribution challenges or for regulatory challenges, these levels of bankarizations in the financial industry have not reached the levels that they should have, even though the banks have been investing and have been electronifying for the last 30 years. So if we were to think about this edge of banking, right? Banking at the edge, where these fintechs and these new digital business models are coming in to conclude or to put the last mile into this digitization for part of the population that in the past did not have access to financial services. And so the whole idea of banking at the edge and bringing in the next billion of people to the financial industry is about ecosystems are coming together. This is about how business models are going, financial business models, are going to part of the population through, obviously, the smartphone, which once you add the virtual account to a wallet that sits on a smartphone, now you have access to, why not, a billion people that can come in and access financial services without having to go through the traditional model of going to a bank and asking for credit and asking to open an account, so forth, so on. So what McKinsey is seeing by the end of 2025, what McKinsey is saying that by 2025, there will be $60 trillion worth of an ecosystem that's going to be built where these fintechs and these digital companies are coming in to glue our industry in multiple parts. And not only they are connecting our industry with the part of the population that was banked, where we think that about 1 billion people can be banked, not only they're doing that, but they're actually bringing in most of the economy that was not, that was informal, right? So when you talk about people that are not banked, you're talking about people that are banking, not banking, but they're actually transacting in the informal economy. And when they are transacting in the informal economy, what they're doing is they're using cash. And so what happens if you bring in all the cash, and in Latin America, depends on the country and depends of how you look at it. Let's say 40% of the economy is conducted in cash. 40% of business is conducted in cash. You could say that half of the economy is informal. So what happens if now you get these new digital companies, these fintechs coming in, connecting financial services to part of the population that did not have access to these services and bringing in, digitizing half of an economy, right? Eliminating the cash and digitizing half of the economy. So not only you're bringing in flows that did not exist in our industry before, or they were not visible to us, not only that, but now you can start to connect with money that sits in a wallet, with digital money. You can start to connect other services and actually capture this money inside the financial system that it never has to leave, right? So if I have a wallet and if I use my cell phone to pay for goods and services at a store, and I also use that same wallet to pay for a ride or book a room for vacation, what's going on is that money is moving between one industry and another one, but it remains in that wallet and it remains in a form of a digital money. And that digital money sits in a virtual account, and that virtual account is with the traditional bank. So this is the $60 trillion that McKinsey talks about, which if we think about digital disruption as a pie shrinking for banks, in this slide, and as I mentioned prior to this slide about how we are going after another billion people to bank them, then the pie is getting bigger. The pie is not shrinking. And that's the different approach or the different view that we have in Citi about fintech partnerships and working with fintechs. And also how digital disruption is not really disruption, but it's actually a transformation of our industry, new business models coming in, new consumers coming in, and capturing the financial flows inside an ecosystem as it grows. And that is the opportunity that we see, and it's clearly also defined by McKinsey in this slide. So what's the secret behind all of this? Well, obviously the secret is a high level adoption of the smartphone. Smartphone in Latin America, in our region, is not a luxury item. So if you travel around the region, if you go to the remote areas, if you leave the metro areas and the large cities and you go out and you drive, you will see that having a smartphone for a family with low income is not a luxury. Right? They may opt not to have a TV, they may opt not to have a car, but they would actually want to have a smartphone to maintain communication with their loved ones, and in this case to transact. In this case to access services. So it's not only just content and communication; it's also to access services, products and services. And these smartphones, the high adoption of smartphones in Latin America, above 80% in many countries, this high level of smartphone adoption is powered by wallets. And if you look at this chart where we see different wallets and the I would say the user base that each one of these wallets has, right? So we think of WeChat with 960 million people, right? And we think about Mercado Pago with 27 million people. And these are numbers that haven't been updated since mid last year. So they're probably even higher by now. And so these are those wallets that now are connecting the ecosystem I refer to. And these are wallets that are that rely on virtual accounts, which are provided by financial institutions, by banks. So wallets and payment intermediaries and fintechs and banks coexist together in this model to bank the 1 billion people that today are coming in and consuming financial products and services, and asking for more and asking for better experiences and customized experiences as well. And so as we put this in the backdrop, this banking 1 billion people in the backdrop, and we look at how does life look like, how does society look like in such a digital transformation? And we don't have to go very far to predict Latin America, because we are, as I said, starting to see significant investments coming into the region. We're seeing significant digital models that are becoming dominant and getting high level of adoptions. But we can also look at what happened in Asia, specifically in China and India. And we could then draw conclusions from that based on the trends that we're living through in our region. But the first part of how this changes the economy, how it changes the way we do things, is what I would call modern life. And what do I mean by modern life? Modern life is we are already living in a time where someone who wants to get employment does not have to go through the traditional routes for employment. Because we today have digital models for goods, distribution of goods, right? Transportation services, that where someone just with a bicycle or a motorcycle, downloading an app on a cell phone, can automatically be employed, and after that start earning income. Again, that income, those payments are going to come into the wallet on their smartphone, right? And so as we see 4 out of 10, and this is the United States, are part of what we call the gig economy. These are freelancers. And in Latin America, all you have to do is travel around and go to Sao Paulo or Mexico City or Bogota or Buenos Aires, and around noontime, you will see all kind of people delivering pizzas and delivering merchandise. And this is that 1 billion people that are coming in, because you could say that a lot of these people were part of the informal economy before and were getting paid in cash, but now they have been brought in to a formal flow of transactions because they're getting payments. And who is paying them? Well, obviously the digital companies that are providing these products are paying them, but they're being paid by a bank on behalf of their employers. And so we have a lot of these in Latin America that were born in Latin America and are growing very, very fast. And again, the modern life, the idea that I can get a job just by using my cell phone and be part of the formal economy and have an account on that cell phone has changed a lot and has changed the game for us. And so we're seeing the opportunities in a different way. The next one is economic vitality. And what I mean by economic vitality is the same way someone with a cell phone can get employment just by downloading an app, starting an account, and requesting to be employed with that company and receiving an email saying, welcome, and yes, you can get started now, and getting their first order or their first call, so forth, so on. In the same way, someone that was living in a village and had a product, basically created something, right? It doesn't matter what type of product, but that person needed a store, needed distribution, needed to display that product and service. And usually they will start a small business and they will stay in their village or small town. And if they wanted to grow, they will have to now go to the big city, right? And that's how businesses perhaps would start and how they would grow. And that was their only way to scale. Now that same person can go to Mercado Libre and open an account and start selling goods on Mercado Libre's website, and they will have somebody coming in and picking up a product and shipping it, and they will get their payments, and now they have a catalog and they have all of that available to them. So while we see traditional, on this slide we see percentage 44% of companies declining, which is basically new businesses, new small businesses declining. On the other hand, we see a big rise in people, common people that have goods that want to sell them, that want to distribute them, go into this new digital business models again, platforms offering them and receiving their payments, and all of this with their computer and with their cell phone. So again, these digital business models are helping with connecting these ecosystems and creating new flows that we banks did not see in the past. And because of that, we see the growth and we see the opportunity. Then we go to, so we've talked about modern life, economic vitality, and now the third one would be big to small to smart. So as APIs start to fuel a brand new economy, which is based on smartphones with wallets powered by virtual accounts, and more people are coming in that in the past were not banked, were not financially included. As all of this comes in, the speed of how we start to transact, and not only how payments are happening, right? So how we are paying in an instant world, these people that are coming in to participate in the digital economy, but also the speed of how the information is being provided back and forth, how the information flies back and forth between between a supplier and a buyer and a bank. We have gone from a business where we transferred large amounts of money a couple of times a month to now being a bank that needs to work with a fintech that needs to process payments that are as small as $1 or less in a frequency of a couple of seconds, right? So we have changed our business model in the sense that we have to process fast and we have to process much frequently, and we also have to do it with very small amounts of money. That changed completely how banks operate. And when you think about how this information flies between the buyers and the suppliers and the banks, the behind the scene and where the opportunity is, as you will see, 90% of the B2B transactions need to be reconciled, right? So if you're sending a payment of $5 to somebody who just gave a ride to clients, you now have to reconcile that payment against the service, right? The same for when you sell a good on a marketplace, or the same when you deliver something across the Atlantic for an import transaction. All of these payments have to be reconciled against what's being sold, who's selling it, when it was sold, and this data today in the B2B environment, right, between distributors and suppliers and large corporations happens in a highly manual way. So when you think about big to small to smart, the smart part of that slide is about how can we now start to reconcile in a smart way, of course, with artificial intelligence and big data and everything else. And this is where we're seeing again a brand new or an emergence of new digital companies that are coming in to solve for this problem, right? So as we digitize the consumer side, as we digitize the gig economy, as we connect that through the fintechs with banks, we still have to solve for the large corporations where there's inefficiency in reconciling these transactions, which are now at 90% with a very high manual process. And so the opportunity would exist not only in modern life and how it's changing, in the economic vitality and how new businesses are being born in marketplaces, but it will also exist in the B2B space under the theme of big to small to smart. And so for Citi, this is not just a trend, something that we have watched taking place in Asia and now is coming into Latin America. For Citi, this has become part of the value proposition. And so our relationship with fintechs to build the future, to bank the next billion, has to do with how we Citi can bring our network, which is in more than 99 countries around the world. How do we bring our local banking licenses that allow us to operate and provide account structures where we can connect our corporate clients, and that's where our value proposition is in the corporate and investment banking and the B2B space. But how can we now, partnering with fintechs, can go to that consumer side, to that gig economy side, to that end user side, so that we can bring what has been left out for years, and again, it's the informal economy and the non-financially included people, and how we bring that together to access this large and brand new market that's been out there. And now we see it's approaching, and we see it as an opportunity. We see it as a very viable opportunity. And so it is part of our value proposition, and that is part of our strategy. That's what we are doing today. Because of that, we have invested and built one of the largest API catalogs in the financial industry today, not only for payments and collection and notification and accounts statuses or payment statuses, but we also have it for self-service, we have it for trade, and we have it for liquidity management. So all of this is available to our fintechs partners in a sandbox that they can access via the web and test. They can integrate with their solutions, and then later we can just do the final integration and go live. So this is for us something that we are commercializing, and we're rolling out across 22 markets in Latin America. And so as I close my presentation, our digital vision for Citi in Latin America is to power the fintechs, is to provide them with that access at the country level and in the network we operate, and also to bring our corporate clients so that we can close that 360-degree circle between suppliers and buyers and producers, but also end consumers, and now with the gig economy, those that are actually distributing and helping with the shipping process of all of this, all of these products. So with that, I want to thank Ray Ruga and Maria Mancuso for inviting me to FinTech America 2020. I wish all of you well and stay safe. Thank you very much.